Thank you, Dr. Jayasundara, for your succinct and yet comprehensive overview of the national policy framework. Our first panel discussion of the day features the topic, Charting Sri Lanka's Economic Trajectory. The panel will feature eminent personalities, Deshamanya Professor W.D. Lakshman, Governor of the Central Bank of Sri Lanka, Mr. Sajith Attygalle, Secretary to the Treasury, Mr. Faris Hadad-Zervos, the World Bank's Country Director for Sri Lanka, Maldives and Nepal, and Mr. Prateek, Roongta, Managing Director and Partner of the Boston Consultancy Group. The panel will be moderated by Dr. Nishan, Executive Director of Verite Research. A welcome to the panel and the moderator. And over to you, Dr. Dimel.
Good day to all of you who've joined today's Investor Forum from all over the world. You have come into a plenary panel with Sri Lanka's most important policymakers and managers and some global leaders that are going to speak to us today. We have the Governor of the Central Bank, Deshamanya Professor W.D. Lakshman, the Treasury Secretary, Mr. Sajith Attygalle with us to open the session. We also have, for an international perspective and from an outside-in perspective, Mr. Prateek Roongta, who's the Managing Director of Boston Consulting Group, and of course, Mr. Faris Hadad from the World Bank, who's going to provide a multilateral perspective because he's both in and out of Sri Lanka and can see it from a global multilateral perspective. We want to get started right away by inviting Deshamanya Professor W.D. Lakshman to share his thoughts for about 4 to 5 minutes. We will do a first round with each person sharing their perspective on Sri Lanka's investment climate and opportunities, and then go into rounds of questions. So Professor W.D. Lakshman, welcome, and the floor is yours.
From today. Thanks to the Chamber of Commerce and the other organizations for the invitation. Good morning, everybody. I'm actually pleased to make my contribution as Governor Central to this important forum. Thanks to the Chamber of Commerce and the other agencies which are responsible for the organization for the invitation. My objective here is to consider the policies and implemented by the system contribute to promotion, investment. There is some, I get the same thing again.
I think
he's stuck. He's having a problem.
Can I turn off something so that I don't get this feel? I hear what I say after I then that confuses. If I
shall we go to Sajith? Shall we go to somebody else? Yeah.
Try whether the same problem. When I say,
shall we go to somebody else?
Moment after I hear echo is very bad.
I think if there is some difficulty hearing you, why don't we go to the second speaker on the panel, Mr. Prateek Roongta, who's the Managing Director and Partner at BCG, and maybe come back to you once again after he makes his contribution. So Prateek, we're really glad to have you on this panel. Welcome, and thank you for taking the time to contribute. The floor is yours.
Kind, and Sri Lanka is no exception. I think it's bouncing back for me as well. If you can hear me clearly, I can continue, but I can clearly hear an echo.
We can still hear you, Prateek. So maybe you should continue and let's see how it goes. Yeah.
Good morning, and thank you for having me on this panel for this important discussion today on charting the future course for Sri Lanka's economy. The last 15 months have been challenging for mankind, and Sri Lanka has been no exception. The country has been hit by the pandemic, and that has impacted the economy and the development of the country. When the first cases of COVID were reported in March 2020, the government imposed the lockdown and shut off tourist arrivals. Domestic demand was hit, and so were exports. We recorded a contraction of 3.6% in our economy. Only the second time since independence that our economy had contracted. All sectors, tourism, transport, construction, textile, everything was hit hard. We witnessed some revival in the third quarter of last year until first quarter this year. Unfortunately, last 2 months we have seen incidents of the pandemic again. But over the last 6 to 8 months, the government has boosted sentiment and demand through several measures. And the central bank has supported the response through easing of monetary policy and trying to protect the currency, as well as providing debt moratorium to SME and other sectors. Looking at the current revival in demand and the economy, we expect that 2021 we might see 4 to 6% growth in the GDP. This will be driven by base effect 2020 as well as normalization of the pent-up demand and spurt in spending in the half of the year, especially driven by the top 20-30% of the population. Exports are already beginning to perform favorably with US and EU rebounding, and that trend should continue this year as well as next year. With vaccination rollout, tourism should also pick up and provide a boost to the economy. And if the global economy recovers, then the numbers could only look better. 2022 might be a challenge because there will be no base effect. So right now, levels of external debt, which we need to manage through a series of mechanisms. Now, how should the country think about driving acceleration to the economy going forward? And what are some of the things that can be done to boost the economy for the remainder of this year and the next year? Let me present a few things. First and foremost, the only way to put this pandemic behind us is rapid vaccination. Sri Lanka has to invest in rapid vaccination rollout. Once vaccination is available and accessible to the public, the government will be able to relax the restrictions on movement. And this is the only way to boost demand and get back to productivity levels that we saw before the pandemic. Currently, as of last month, Sri Lanka had vaccinated fully less than 5% of its population. I think it's imperative that we take an aggressive target to vaccinate all those who are eligible before the end of this year. The second most important initiative for Sri Lanka would be to boost export in priority sectors, which has been one of the core pillars of the economy for last many decades. Unfortunately, the contribution of exports in GDP has come down for around 40% in 2000 to around 20% in 2020. So we've seen a significant contraction in proportion of exports to GDP, which we need to revive. There are sectors like tea, apparel, rubber, etc., where Sri Lanka enjoys a quality as well as a price advantage. And we must put in place structural mechanisms to boost the export of these sectors and get Sri Lanka back on the export map over the next 2 to 3 years. One of the very important sectors of our economy has been tourism, and we must take proactive measures to revive tourism again. Consumer preferences over the last 15 to 18 months have changed, and tourists and travelers are looking for safe, secure destinations. And it is imperative for Sri Lanka to embed that in our tourism marketing strategy to make travelers feel comfortable coming to Sri Lanka over the next 1 to 2 years. Another important initiative for us would be to reduce the debt to GDP ratio, which as of 2020 was at 100%. With inflows for the government going down, managing sizable debt service can be quite burdensome. And therefore, it's imperative that we look at measures to reduce our debt burden. These could include selling the government's stake in loss-making state-owned enterprises. It could include debt restructuring with the help of specialist agencies like IMF and World Bank. And it could also look at relooking the tax regime to address the fiscal deficit by creating long-term structural changes in the tax incentives given to sectors. A very important pillar of Sri Lankan economy has been the SME sector, and therefore we have to put in place measures that would boost the SME sector. 45% of the country's workforce is contributed by the SMEs, and they will continue to be an important contributor to the country's GDP. While the debt moratorium has helped the SME sector, but we need to now put in place structural reforms and mechanisms to boost this sector over the next 1 to 2 years, which may include financing by public sector banks or providing stimulus packages, which will make these entities viable even in the wake of reduced domestic demand. And finally, the pandemic has taught us the importance of self-resilience. And Sri Lanka should think about building resilient supply chains which can help us in any future such crisis. These may involve putting in place mechanisms that include local manufacturing of food items, hospitalization, pharmacy, etc., such that reliance on imports for everything is reduced in the future years to come. To summarize my messages, I feel that as a relatively small but strategically located economy, Sri Lanka has huge potential to do well in the years to come. This will involve driving higher public-private participation. It will involve inviting private investment, including FDI, and boosting key sectors that the economy has been built on, such that they help both spur the domestic demand as well as exports and bring back foreign currency in the country. So I am quite optimistic about the outlook of the economy, provided certain measures are put in place, and we hope to see a better 2021 and definitely a better 2022. Thank you.
Thank you, Prateek. Thank you. Let me move on to the next speaker. And I think because we've had some difficulty on the audiovisual side, with me in the studio is the Secretary Treasury, Mr. Sajith Attygalle. Let me invite him to make the next remarks, and after that, we will go on to Professor W.D. Lakshman, Governor of the Central Bank, and then to Faris Hadad, who's the Country Director for World Bank. Mr. Sajith Attygalle, thank you for being in the studio with us today. I think based on the comments that Prateek made, he highlighted perhaps 4 important issues: the rapid vaccination rollout, boosting exports to GDP, reducing the debt to GDP ratio, and boosting the SME sector and the supply chains to sustain that. So I think the investors globally that are part of this forum, I know there are over 10,000 people who've come into this program today, are waiting to hear from you because of the very important position you hold in terms of managing and guiding economic policy in Sri Lanka. Over to you.
Right. Thank you, Nishan. Good day, and thank you for inviting me. I think this forum is timely, especially when the country has just seen the passage of the Colombo Port City Commission Act. So my presentation, the small presentation, I think I'll be touching the issues raised by the earlier speaker. So it's fair to say that this government is in a hurry to realign the economy onto a growth path. That's why as early as December 2019, a new tax policy to stimulate growth was announced. It is also why that the unpaid dues to large as well as SME companies amounting to almost 3% of GDP was identified an issue and was decided to settle them. So when the dues were paid amidst a COVID, the fiscal deficit increased over 10% in 2020. However, both the new tax policy and the settlement of dues helped the economy. Companies were able to clear their dues to the banks and start reviving their operations. In fact, had that decision not been taken, the economy during this pandemic would have contracted by more than 3.6%, with unemployment rates in double digits. Going forward, a public investment program of around 5 to 5.5% of GDP in the medium term will be maintained. While revenue was only 9.6% of GDP in 2020, this is in the background, of course, the economy contracting by almost 3.6%. However, with a growth that we envisage to be around 5 to 6% in the medium term, we can meet the revenue targets of about 14% by 2025. Therefore, the deficit of 4.5% by 2025 is very much a reality. The new tax policy is investment focused. It is simple and competitive to facilitate investment in sectors with high potential. For example, IT sector is now at 0% from 14% earlier. Service sector is at 14%. Agro-processing and manufacturing is at 18%. We have provided tax holidays for around 7 to 10 years to selected sectors such as investment, example, dairy processing, vocational training, etc. The strategic development law will also provide a wide range of concessions for strategic investments. Most importantly, we assure consistency in the policy. On the expenditure front, the capital investments will be carefully picked, looking at their ability to expand the economy and the high multiplier effect. Of course, we will ensure that the COVID-related expenditures in health and also social safety nets will be taken care of. Connectivity is a key investment area. Physical connectivity through a modern road network that provides access to markets. Example, the new elevated expressway will connect the Colombo port to Hambantota port. Investment in digitalization is also expected to not only ensure better service delivery, but also better expenditure management. Domestic manufacturing has also helped expenditure management. Take the medicines budget, which is around US dollars 400 to 500 million per annum. In the last 12 to 18 months, around 40 medicines have commenced local manufacture. I think at this time of the pandemic, the local manufacturing of the Sinovac vaccine, which is expected to commence in July 2021, with an initial 13 million vaccines by September 2021, will be a great help. Let me address the question how the public investments are financed. As has been done in 2020, the public sector will focus on domestic financing. Foreign financing from the traditional bilateral and multilateral sources will prevail at around 1 to 1.7 billion per annum. We are also looking into the non-debt creating sources to support the financing with around 800 to 1 billion per annum in 2021 going forward. I must highlight that the debt dynamics has shifted since 2019. The foreign currency debt has reduced to almost 42% at the end of 2020 from nearly 50% in 2019. The public sector debt is expected to be around below 75% of the GDP by 2025. As for the reform agenda, let me speak about the much talked of Selandiva Investments. This is a fully government-owned holding company that will work as the investment arm of the government. The company will take over underutilized, underperforming assets, especially prime real estate assets, will restructure them and raise capital. Selandiva has formed a SPV, Selandiva Leisure, to consolidate the Grand Hyatt, Grand Oriental, and Hilton, and several other prime properties, and a listing is due in the Colombo Stock Exchange, hopefully by the end of this month. So, Nishan, I will stop at this point. I can take questions after that, right? So this broadly the fiscal scenario that I wanted to explain initially, right?
Thank you very much, Mr. Attygalle. I think Prateek talked about managing debt also in his contribution, and I think one of the main responses you're making to that, where he mentioned state-owned enterprises, is the Selendiva initiative that is seeking to restructure state-owned enterprises, driving investment into them, as well as improving efficiency and production in those sectors. So thank you for bringing out that, I think, a very new initiative of the government in terms of Selendiva that has not been in the public eye too much, but I think a great deal has been going on in the background on that. So let me now invite Professor Deshamanya, Professor W.D. Lakshman, Governor of the Central Bank, to make his comments on top of the comments made by the Secretary to the Treasury to explain how the top policy managers and economic leaders in the country are thinking through the future opportunities for investment in Sri Lanka. Deshamanya, Professor W.D. Lakshman, the floor is yours.
Thank you, Nishan. Thank you very much for everyone who has involved in this organization of this seminar and for inviting me. I will try to consider in my brief presentation how policies and measures implemented by the central bank will contribute to promoting investment in this country in this critical period. This needs to be dealt, as everyone before me mentioned, in the contextual peculiarities of the period, governed by the difficult COVID-19 issues. Unprecedented pandemic without any proven preventive mechanisms. And health measures also taken to safeguard lives are putting means of livelihood at risk. The impact of COVID-19 is increasingly getting under control because of the contributions from the vaccinations. And also during this particular period, there is a significant impact of COVID-19 on the business confidence and things of that nature. But this is also going to be after the conclusion of several weeks of movement restrictions. I am sure there will be control in the further spread of COVID-19, helping to improve business confidence. The basic premise on which the central bank operates, everybody knows, is to maintain macroeconomic stability in the context of growth and development. As we all know, stability without growth is virtually useless. And also, growth without stability is unsustainable. So stable growth is really the objective. The bank operates now also on the pragmatic view that it must engage in these activities in collaboration and not separated from or in conflict with the fiscal authorities. On the socio-economic stability in the pandemic times, there has been the need to ensure short-term survival of small, medium, and large businesses, individuals and their families, their employment prospects, all this particularly at the lower social strata. Hand in hand with the other government authorities, the central bank has done this very well so far with the help of other financial institutions, state sector as well as private sector, but with difficulties encountered, of course, in the follow-up and monitoring. These measures have helped maintain social harmony in the country during a very difficult period, an essential condition for investment and growth promotion. There are investment-friendly macro policy framework provision. We are trying to provide the conducive macroeconomic conditions for investment to take place, growth-friendly, stable conditions, maintenance of stability and resilience in financial institution sector takes some importance during this period, particularly the not only banks, but also particularly the non-bank financial institutions. Continuing problems associated with a few financial institution failures in the past. Those continuing problems are there, but we are sorting them out gradually. An achievement that we can boast of is that there was no fresh financial institution failures during this difficult COVID-19 affected period. Then there is also the price level stability that we could prevail for the last many months, starting from 2019. We have been able to, during this difficult period, even maintain 4 to 6% of inflation range with difficulty, but maintaining price level stability in the country. With investment and growth picking up, there will be pressures on the price level. This is natural, and in fact, perhaps also needed for sustained growth. But the central bank will be watchful to prevent excessive price increases, as it happened historically in the period of 1980s. The CBSL, central bank, as the agent of the government, maintains the external sector stability conditions. In this case, there are a few new departures in the background policy. These things have been mentioned earlier by the Secretary to the Treasury. These new departures include turnaround in the trade structure, away from the heavy import bias and moving on to greater importance of exports, particularly at value-added conditions and also in a structurally diversified manner. That is also the objective deliberately pursued to reducing the external debt ratios. So far, from around 48% of total debt in 2019, we have brought the external debt ratio in the total debt down to about 40% in 2020. There has also been reduced dependence on debt-creating investments, a point which has also been repeated. Then there has also been the reduced dependence on commercial loans from financial markets. These new departures will help us in the time to come to be on a sustainable debt management path and eventually leading to reducing substantially our debt levels. Going beyond the traditional domain, the central bank today gets involved in also the real sector issues, particularly affecting the external sector. Also, again, in collaboration with the government departments and other government ministries and other agencies. There is advice extended by the central bank on the ongoing import rationalization program, import replacement activities, and more importantly, the export promotion. Several task forces have been set up by the central bank, and central bank getting involved with the ministries concerned in achieving targets in export growth. In areas of commodity exports in different real sectors, service exports, including an emphasis on the ICT sector exports, remittances of persons employed abroad, and also tourism sector. These task forces are operating even today with discussions organized with the relevant actors. The action to get proportions of foreign exchange earning into our foreign reserves has been going on. Forex earnings alone cannot, in the short run, meet all debt repayment requirements. Therefore, inflows through certain financial sources, short as well as long term, have been pursued. Commitment to maintain the country's untainted debt repayment record is the commitment, is an undertaking which the central bank takes up with confidence. There is the question of resources to pay debts. These are planned, and planned action is executed with follow-up and monitoring. Also, as a new departure in economic policy these days, I should also, in passing, mention the green economy initiatives, which are helping in reducing our import payments and achieving various other objectives. This implementation of the policy of reducing the external component of the debt is having some adverse impacts, as we all know. There has been an increase in Treasury bill holding with the central bank, and there has been also a substantial increase in the money supply, but of course price stability remaining. These are unavoidable factors given the very, very unusual types of events that are happening during this period. These are also, I strongly believe that are going to be short-term developments which will be reversed within the next 2 to 3 years. I will end up by referring to a very important institutional development that is taking place. Everyone has spoken about it, namely the Port City project, Port City development project. The stable and investor-friendly macroeconomic conditions created will be extremely useful for the country to benefit from this new and revolutionary institutional change. Thank you very much.
Thank you, Deshamanya, Professor W.D. Lakshman, Governor of the Central Bank, for your comments. The Governor has made 5 very explicit commitments, I think, and these are important to recognize because they're signals for investors and others on how the Governor sees the trajectory of the economic policy in Sri Lanka today. First, he has made a commitment to macroeconomic stability. That stability is extremely important to the central bank. He has made it clear that stability will not be the only focus. that stability will be in the context or with a commitment to economic growth, and that is also very high up on the agenda. And that the stability and growth are going to ensure that the stability is not only in economics but also in society. So he's talked about support and welfare measures that keep social stability in place as well. That's the third. Fourth, he has made a commitment to keeping an eye on inflation and keeping it in single digits. Perhaps he's given a range of 4 to 6% currently, and keeping it in that single digit range has been the commitment he's presented of the central bank. And last of all, a very important commitment made today that Sri Lanka does not plan to restructure or default on its debt, that the central bank is committed to paying off all the debt holders of Sri Lanka in a timely manner. So these are 5 very important, I think, positions and commitments by the governor of the central bank. Let's move on now to the last speaker on the panel, Mr. Faris Hadad-Zervos. He's the country director for Sri Lanka, Nepal, and Maldives of the World Bank. I think he's going to take a more multilateral view and give us some perspective on how he sees Sri Lanka's developmental challenge as we go forward. So I think we are going to benefit from an interaction between the panelists because we have both the key policymakers and managers of the Sri Lankan economy, as well as 2 panelists who have a multilateral and international perspective. Mr. Faris Hadad-Zervos, over to you.
Thank you very much. I hope you can hear me. I trust you can hear me. First, good morning, and to others, good afternoon and good evening. And it's my great honor on behalf of the World Bank Group to be at this very important forum, the Sri Lanka Investment Forum 2021. I will do my best to complement what my colleagues have very rightly said. And needless to say, COVID-19 has triggered what is likely to be the biggest economic fallout since World War II. For this reason, I'd like to first congratulate the government of Sri Lanka on the many achievements in containing the COVID-19 pandemic in the last 2 waves. The government's management of the health crisis has been well recognized worldwide, and we are encouraged by the measures taken by the government to contain the ongoing wave. Today, we're here to talk about investment in Sri Lanka, and you've asked me to speak about the macro-fiscal challenges posed by the pandemic and the medium-term to long-term opportunities to invest in Sri Lanka. For me, it's very important to first discuss the huge potential of some of the country's priority sectors and niche industries that are globally competitive to contribute to the economic recovery from the pandemic, and the need to build on these assets. And then after that, I'll move on to discuss the macro fiscal challenges and opportunities to be tackled in the short to medium term. You'd agree, I think we all agree, that's why we're here, that FDI, foreign direct investment, has a huge role to play in helping the country to and leverage its potential and diversified sources of growth. In that sense, I want to focus on 3 priorities in the time that I have. First, in some of our analytical work, we identified that in some sectors such as textile and clothing, IT and tailored manufacturing, Sri Lankan firms have been expanding their global footprint and have been able to become very competitive globally and move up the value curve to more sophisticated products and markets. Here you're showing your potential in these sectors. So I think the discussion we need to have is clear. Where can policymakers create an ecosystem to tap into this innovative drive in the large existing manufacturing sectors, such as apparel, and entrepreneurial dynamism in niche sectors such as ICT and high-tech products to fully harness Sri Lanka's comparative advantage and integrate it further into the global value chain? These sectors have scaled up with the latest outside technologies and experiences, hold the potential to drive Sri Lanka's transformation. Second is the tourism sector, which my colleague from BCG mentioned. The importance of the tourism sector can't possibly be overstated here. It's the second largest export earner and accounted close to 55% of the country's GDP pre-pandemic, of course. Tourism-specific investments were around 10% of total FDI before the crisis. To move the needle further, it's more than just tourism. Now that we're hopefully looking at a light at the end of the COVID tunnel, let's rebuild back better and greener. It is time to improve logistics and connectivity and address shortages of skilled and service-oriented workforce, so critical for Sri Lanka if we are to attract even more high-value tourism services. Third, let's remember, friends, to not focus much today on what Sri Lanka was, is, and what will be. We care about that, but the reality is investors don't. They don't really focus on what Sri Lanka is versus what it was and what will be, but what the Sri Lanka is versus other tourism destinations, investment destinations. So it is Sri Lanka versus other countries. That's the name of the game. Sri Lanka's potential as an attractive investment destination for foreign investors for new entrants, I mean, that's, and an equally attractive local business environment for new entrants is very clear. We wouldn't be here at this session if we were not. But Sri Lanka's distance to the frontier remains vast. And this is not me speaking of a shortcoming, but rather a massive upward potential for a country with huge potential and a very positive horizon. Needless to say that the country's vast potential and its trade exploits are historic and legendary. The stories of Serendip echo in my childhood also. Alas, friends, Sri Lanka's FDI performance in 2019 was less than we would want it to be, as at 1% of FDI, while Vietnam and Malaysia were able to attract around 6% and about 2.5% respectively. Sri Lanka is aiming to achieve 5 billion of FDI by 2025, and we believe this is entirely doable and realistic, given its rich natural resources, strategic location, highly literate workforce, and opportunities for investment in tourism, information technology-enabled services, logistics, high-value added apparel, and food services, among others. If and when the right combinations of things are in place, this becomes an ideal time to come in and invest. This ultimately rests on a collective set of policies, and I know my colleagues, respected Secretary and Governor have mentioned, this ultimately rests on a collective set of policies and practices that make up an investment ecosystem, ranging from improvements of the investment climate and elimination of unnecessary regulatory burden, to enhancing predictability of laws, and to enhancing the responsiveness of the bureaucracy to deliver effective FDI services. What we've seen in other countries in that is that investment promotion is the beginning of the story and not the end. The name of the game is in attracting and retaining efficiency-seeking foreign direct investment. Also, for the immediate term, government will face a challenging balancing act, and rightly so, between fiscal sustainability and jump-starting the economy, the recovery. All countries are grappling with this. So what is the recommendation here is use this pandemic to turn a challenge into opportunity to tackle the fundamental core issues that existed before the pandemic and long before, to build back better, greener, and more agile. In the interest of time, I won't go into the macro fiscal aspects. I know we will have a discussion, but I look forward to discussing that moving forward. Thank you very much. Over.
Thank you, Faris Hadad-Zervos, Country Director for the World Bank in the region. Let me just move us on quickly because this is a short, sharp panel. I think Faris ended, he made three major points, I think, that there is innovation in important areas, and Sri Lankan firms are succeeding not only in Sri Lanka but globally, and tapping into that innovative success potential and supporting it can be quite important for investors and for Sri Lanka's future. Second, that tourism and services have enormous potential post-COVID to bounce back and expand. And thirdly, that there is, when comparing Sri Lanka versus other countries, that there is a gap, and the gap that signifies potential, and potential that can be tapped into by improving predictability of policy and capability of the bureaucracy, both things that Sri Lanka is quite able to do. Let me switch to Prateek, Roongta, and kind of reverse that question in a way on a global comparison. The question that Faris ended up with, how does Sri Lanka compare with other countries? So how would you, Prateek, evaluate Sri Lanka in the context of its peers, both the regional and in terms of emerging markets? What are your comparative pros and cons? Over to you.
So Sri Lanka has a very strategic location, both to serve South Asia and Southeast Asia, and also provides a gateway to the world, and actually has a lot to offer to investors, thanks to increasing investment in public infrastructure, a low interest rate regime, fiscal benefits, and robust policy reforms. If you were to compare Sri Lanka to other economies in emerging markets and also in the region, there are a few things that stand out. First and foremost is relatively robust GDP growth for the last few years, and also in the year just gone by. In 2020, Sri Lanka's GDP contracted by 3.6%. Over the same period, we saw India go down by 8%, Thailand go down by 6.1%, Philippines contract by 9.5%, and Malaysia contract by 5.6%. So there has been more robustness which has been witnessed in Sri Lanka's economy. Even for 2021, we are expecting Sri Lanka to grow at between 4 and 6%, which is higher than the forecast for countries like Indonesia and Thailand. So there are key factors which have driven this robust GDP growth, and which we are looking forward to in the next few years to come, which is growth in domestic demand. There is increase in trade, and there is investment in large infra projects. We've spoken about the Colombo Port City as well as the Hambantota Industrial Zone, which are all positive factors to boost the GDP going forward for the next 1 to 2 years. I think the other thing that holds Sri Lanka apart from peer countries in emerging markets is the human capital skills. There is a large percentage of the population which is English speaking, and we expect general education levels are high, and we expect the number of graduates to become 3 times by 2025. All of this enable investors coming into Sri Lanka to have access to good quality human capital at sustainable and competitive compensation levels, which favorably compare Sri Lanka to other countries in emerging markets, many other countries in emerging markets. The third aspect is the ease of starting a new business in Sri Lanka, which is a metric being tracked, and Sri Lanka here scores better than many countries in the region, better than India and better than Vietnam. Sri Lanka's rank on this index is 85, which is in South Asia behind only Bangladesh. And the same survey also notes that it takes 8 days to start a new business in Sri Lanka, whereas the average for South Asia region is 15. So at least those wanting to start a new business, it's a positive news to compare Sri Lanka with other countries in emerging economies. Next, Sri Lanka's advantage is in terms of being a cost-effective location. It's a low-cost location across many dimensions. For example, the power cost in Sri Lanka is the lowest in South Asia. And I already spoke about the fact that it's easy to attract good quality human capital at competitive compensation in Sri Lanka, which makes it an attractive investment destination compared to some of the peers. And finally, I might say this from personal experience, but Sri Lanka is one of the most livable destinations in South Asia, and therefore is attractive for expats to relocate to and spend time here. So all these factors make Sri Lanka a fairly attractive destination compared to other geographies in the region and emerging markets. There are 2 things to watch out for. I spoke about the ease of starting business, which is attractive in Sri Lanka, but on the overall ease of doing business index, Sri Lanka still leaves a little bit to be desired and is behind many of its peers. Countries like India and China have really leapfrogged on this index, but Sri Lanka has been around the same level since 2015. So this is something we will have to work on. And the other is, we feel that Sri Lanka has not really got its fair share of FDI in spite of its strategic and attractive location. So that's something that we need to work on over the next few months and years to attract the right amount of FDI in the country. Very quickly, just talking about distilling learnings from what other emerging markets have done, which have held them in good stead in becoming more attractive investment destinations. We need to strengthen our market environment, and we need to focus on creating stable and consistent policies, on creating a conducive business environment through interest rates and stable currency, and providing market access to various market participants. For example, over the last year or so, the government is committed to a stable 5-year tax policy window, which works very well in attracting investors to the market. We need to continue focusing on talent availability and create specialized talent through upskilling programs. We need to get more women in employment, and we need to ensure a more geographic representation of the talent. Take Singapore, for example. 50 years back, Singapore focused mostly on industrial development, but as the world has moved on, over the last 10, 20 years, Singapore's been focusing on becoming more of a knowledge economy, and that could be a path that Sri Lanka could aspire to take over the next decade or so. Thirdly, we have to put in place a very compelling legal and regulatory framework which creates a competitive incentive structure for firms to compete in the market. We need to ensure that we have strong bankruptcy, strong IP, strong labor laws, which make it easy for firms to operate in. And we make it a level playing field for both domestic and international firms participating in the market. And lastly, we need to ensure sustained focus on infrastructure development. This has been a theme in the country for the last decade, but more on this is required. And we need to continue creating business parks. We need to provide subsidy on utilities and create a mechanism whereby we are able to offer prompt clearance to new projects which are being taken up. So to summarize, as I said earlier, we believe that Sri Lanka is strategically poised to be an attractive investment destination. Proactive measures on part of the government and various industry bodies will only strengthen that, and we look forward to seeing more investment come into the country over the next many years. Thank you.
Thank you very much, Mr. Prateek Roongta. Mr. Attygalle, I'm going to come to you with a host of questions. I think that the speakers have surfaced and also have come in from the audience also, and I'm going to bring all of them together. But I think Prateek has highlighted two very important issues. He has re-emphasized the strategic opportunities and position of Sri Lanka, locationally as well as otherwise. And also the very livability of Sri Lanka, I think, are two things that we haven't discussed previously, that it is seen by many people as perhaps the most attractive place in South Asia to live. And that can become a very important factor in thinking about Sri Lanka as an investment destination. Mr. Attygalle, Prateek has talked about not just the ease of starting a business, but the ease of doing business and continuing in business. He has flagged the fact that, and the audience has also, that FDI has not been very forthcoming over a period of time, and even from the stock market, that there has been an exit of foreign investment. And I think the World Bank as well as Prateek has highlighted these questions about predictability of policy, the capability of the bureaucracy. So it would be, I think, very useful to have you respond to some of those questions and views raised by the panelists.
Right, for me, I think, to answer your question, it's one is the bureaucratic problems or the issues that are there in the system, how to overcome that. I think Prateek mentioned about the pluses in the system or the country's destination and things. For me, I think certain structural reforms that we have undertaken would be in the medium term to long term, it would be mainly investor positive or to support the investments. One decision of the government is to appoint a deregulation commission, which is working on, and also we have parallelly, we are introducing the new financial regulations as well as procurement processes in government, which will short circuit most of the delays that is happening today. Then the other critical area that I see is the legal sector reforms. This includes the rewriting of archaic laws, expansion of the commercial high courts, and also a new concept of introduction of an investment development court, that is on the legal side, and also from the technology side, the digitalization of court processes also is happening. So these will be all investment-friendly initiative that the government is taking. Then somebody mentioned about the electricity part. There is a move to reduce the electricity tariff with cheap and cleaner source of electricity generation being promoted. As such, LNG, which is cleaner and cheaper, is to be fast-tracked from the envisaged 2025 to 2023. This will mean that around 300 megawatts of LNG will be there in the system by 2023. And also this solar energy, about 1,800 to 2,000 by 2025 would be in the system of the electricity thing. So this all will help the cost of generation to be improved and thereby the cost of operations for businesses. Also, we have pioneered investments in biotechnology and robotics. There are two institutions, again, SLIF, it's called SLIF, that is for the biotechnology part, and SERA for the robotics. These entities will work with the private sector to introduce new technologies and improve the production capacities. They will be given the autonomy to be managed and operated as competitive private sector entities, of course with certain measures of accountability in place. So with the strategic location, those things benefiting the Sri Lankan investors, the government is keen on, in a way, try to reduce the red tapes, remove the red tapes to certain initiatives or certain structural reforms that we have envisaged.
Thank you very much, Secretary to the Treasury, Mr. Sajith Attygalle. I will come last of all to Deshamanya Professor W.D. Lakshman, Governor of the Central Bank, because there's a slew of questions from the audience about reserves, about exchange rates, about interest rates, and how Sri Lanka plans to stabilize in these areas and manage. And while Professor Lakshman looks at those questions that would have been sent to him in this hybrid event, let me come to Faris Hadad-Zervos, Country Director of the World Bank. We know that a rising tide lifts all boats, and in a sense, part of Sri Lanka's attraction for FDI will also be its growth story. I think, in view of the general slowdown in growth even before the pandemic that we saw between 2016 to 19, what can be done to recover growth in the country going forward? How is the World Bank advising the government on this? And what can it share with investors on the growth potential of Sri Lanka at this time? Faris Hadad, over to you.
Thanks very much. It's a good question. It's a complex question, of course, but one I'm happy to try to answer a little bit. And I think first it would be very important to preface this, that look, we're all around the table here because we are believers in the potential and the vast potential of Sri Lanka, right? We would not be here if we were not. That's first. Secondly, I think in terms of the growth trajectory and the potential and the horizon, we're all also optimistic and positive on that. So there's no doubt. You used the boat analogy, and I think the boat analogy is a very good one because, as you said, a rising tide lifts all boats, and I think that is definitely true. But also a tsunami, unfortunately, rattles all boats, and this is what we are seeing with the COVID pandemic. So. From my side, focusing a little bit, and given this is what the institution does, and let me talk a little bit about the macro fiscal, but we have to recognize again, one is generally the horizon. Again, we are all positive and optimistic on what Sri Lanka has been, is, and what will be. Secondly, we need to recognize that the government is focusing, not only the government of Sri Lanka, but many other countries, is trying to balance between ensuring fiscal sustainability, supporting economic recovery, saving lives, and of course, catering for emerging post-pandemic spending needs. So we have to recognize that this is a very difficult balancing act. Now, on the macro fiscal, let's just really discuss the implications of the crisis on Sri Lanka. Pandemic is expected to leave persistent effects, not only on the country, but across the world. With GDP projected to return to pre-crisis levels, all things being equal. Again, all things being equal, we all know the third wave was a surprise to many of us. But if things turn positive soon, which we hope will, we expect a return to pre-crisis levels by 2022. Of course, friends, you would agree that economic growth depends on both the factors of production, labor, and capital, and improvements in productivity. Now we're talking about, the longer-term narrative. All these things, and all of these things have been affected by COVID. We've seen that across the world, the depletion of skills from long unemployment for a lot of people, prolonged school closures, especially for children without access to digital to digital tools. This is across the world. I'm not speaking of Sri Lanka now. And reduction in overall investment. These will affect the potential growth everywhere. And public investments are likely to be held back by public resource constraints. Sri Lanka is not unique in the world to this unfortunate thing. On the macro fiscal perspective, the COVID-19 pandemic has aggravated countries' long-standing fiscal and debt vulnerabilities, which pre-existed before that. So it is not the case that COVID created all these problems. It created massive, but it also rose to the surface some structural issues that existed. And we've seen sharp contractions in economic activity, which is the largest in recent history across the world. So it's not an easy task. Contraction in output and lower revenue collections have led to rapid deterioration in fiscal deficits and debt to GDP ratios across the world. So no country is immune, I'm afraid to say. But quickly, I think first, so what are the priorities here? And very quickly, I would say first, and this is, we're very grateful and honored to be engaged in very deep policy dialogue with our counterparts. In fact, I saw Professor Lakshman, I think it was 4 weeks ago, Professor, in Colombo, wasn't it? And of course, ST, Secretary of the Treasury, and very grateful to have very quality dialogue and engage. From our perspective, some of the things I think first is this issue, and it's not new to all of you, and the government is fully aware of this, and it was raised by the professor and the secretary, was let's get this debt thing tackled to give more space in the future. And of course, the words of comfort by the governor and others is very important. Like other countries, Sri Lanka's debt burden requires a high debt service obligation that obviously constrains fiscal growth moving forward. So we have to, focus on this. And I know they're trying to tackle this. The budget deficit in 2015, 2019 averaged 7%. Now, because of COVID, it's gone to 13%. So this is an issue that we're hoping over time will be reversed and we can address. So with opportunities for debt financing limited, there's domestic revenue mobilization, which is really important, becomes central to address these issues of pressures on public expenditure in the future. Secondly, I would say let's keep the momentum on global integration, and I know this is one of the topics we're discussing now. This is something government is focused on, which is commendable. Working out the kinks that we're talking about are going to be absolutely key. So let's put the export earnings over GDP as a key measure to follow. Export earnings over GDP, and let's follow that over time and see what happened. So that's going to require constant touch-ups to our policies until we see different numbers, prioritizing the trade regime, asking whether there are tariffs or para-tariffs or other non-tariff barriers that can be addressed to unshackle this, and as we said, to provide predictability in this regime. The other issue was a very important issue, and I know there are different approaches to this, and there's no right and wrong. This is a government policy, and there are many aspects to this, and I respect that. We have to look at the role of imports. Where does the role of imports actually help exports? And if there are imports that help exports, we need them, and let's get them in. Looking at the numbers also, the types of export product categories in Sri Lanka have remained relatively unchanged over time. We need to change it. And I know, as the ST said, the ICT sector is a very promising one, and I think we need to look at, and we need to get more of that. So next year when we're sitting, we have to show what we've done in ICT on that. So the end game is, of course, higher end, higher intellectual content export mix. As my colleague had mentioned, there's a human capital index that the bank prepares, the World Bank prepares. Sri Lanka has the highest human capital index in South Asia. It has the highest number. But South Asia is still relatively low, so I think there's a little bit of a potential there to move forward. So that tells me that there is actually a huge potential for Sri Lanka to enter further into global value chains. And there is the right mix there. But the importance of FDI and bringing know-how and bringing skills and bringing technology, the right imports are going to be absolutely important for us to do that. So
thank you
very much.
Thank you for your extensive comments, which I'm not going to summarize. I promised Deshamanya, Professor W.D. Lakshman, Governor of the Central Bank, the last word. We have to keep it quite short because our time is up, Professor Lakshman. I will not try to summarize this event because I think we've come to the end of our time. And I will be speaking on the macroeconomic outlook and investment opportunities tomorrow at an evening session. Professor Lakshman, if you can very briefly, maybe in 1 or 2 minutes, touch on the many audience questions that have been sent to you. They're on 3 R's, rates, exchange rates, and interest rates, on reserves, and on repatriation, which is about policy stability. Will you give confidence to people that they can take their money out when they bring it in? Will the reserves be filled up enough to meet debt obligations? And will rates, interest rates and exchange rate, what is your outlook? I will give you a very short time to make brief comments, and then we will come to the end of the session. Over to you, Governor of the Central Bank.
Thank you, Nishan. You are making things very difficult. On the one hand, shortening the time available to me, and on the other hand, asking me to deal with some very crucial, critical issues facing Sri Lanka today. Anyway, we have heard quite a lot about what has to be done. Reminds me of some of the things I used to teach in classes some years ago. So many things, but that's a huge list. You are giving me the last minute or two to talk about very specific issues. Let me go on to that. We were concerned about the interest rates and exchange rates and the question of how long they are going to remain at these levels. In fact, our commitment so far in all our attempts, all our discussions, all our discussions within the Monetary Board, in our discussions with the financial institutions, discussions with the government authorities, we were very confident and we were very concerned about keeping these rates at low levels, particularly the interest rate, low interest rate regime, as well as a stable exchange rate, low interest rate regime, as well as an stable exchange rate regime. The exchange rate stability obviously affected by the reserve position of the country, and we are trying our best to improve the reserve position. This year is going to be difficult, but still we will maintain by the end of this year. We have measures lined up, programs lined up, discussions in the pipelines to maintain the level of reserves at the 3 months import level. And by 2022, with more and more investments coming into the country, we expect that the reserve position will improve from 2022 onwards. We maintain the stability of reserves by the end of this year, and we will also pay up all the debts which are falling during this period. There are about confirmed and not so confirmed sources of finance lined up for this year. about 10, 15 different items. I'm not going to go into details, nor do I have the time for that. These are, we are confident that these things will materialize. Then the policy stability is what we are, policy stability in the other subject areas is what we are trying to maintain, working together with the government authorities. Maybe if I am to stick to the 1 minute limit you have given, Nishan, maybe I will stop at this point. Although on policy issues, I have a few more things, I had a few more things in mind. Anyway, thank you very much. I'll stop at this point. Thank you.
Thank you, Deshamanya, Professor W.D. Lakshman. Let's bring this session to a close. Thank you so much for everyone who's joined in from all over the world. You've heard from some of the most important voices in Sri Lanka and also from a global multilateral perspective on the opportunities, challenges, and the way to look forward with regard to investing in Sri Lanka. So thank you for joining and good day to you.
Can, right.